Harsh joins in with the key factors.
Well, thank you, Aisha. When I'm looking at how, of course, the larger perspective with regard to, increasing bond yields is it's largely on the back of inflation. And inflation, what it is causing is, of course, increasing rates and central banks withdrawing liquidity. A withdrawal of liquidity largely will mean that central banks are buying less bonds, infusing less money into the system, and in fact now starting to sell bonds starting June 2022. That's where the Federal Reserve is at. Why is this impacting equities? Of course, that's largely on the back of the higher yields available on bonds globally at the moment. Of course, we have seen the US 10-year yield rise up from 1.5 to 3.4%, and that higher yield will mean that there is a risk of trade happening. It's a shift of capital from equities, the higher risk cryptocurrencies, into bonds. And of course, that also means that there is an increasing return expectation from the riskier asset classes. Moving quickly on to how bond yields have risen and how dramatically they've risen, right? When we're looking at the US 10-year yield, that's gone up from roughly 1.5% to 3.4%. And where the Indian yield is concerned, it's up from 6.5% on the 31st of December to 7.6% as of now. Also, when we're looking at the US bond yield curve, that has inverted. And what does that mean? That largely means that short-term bonds are now, higher yielding than the longer-term bonds. Generally, short-term bonds are lower yielding because there is more visibility over the short term. Now, short-term bonds are higher yielding, largely on the back of interest rate hikes, which are seen in the short term. But the longer-term bond yields continue to be lower, which means that over the longer term, investors are still expecting bond yields to come off over the 10-year tenure, of course. And that, of course, also signals a recession risk. In fact, over the last 100 years, bond yield inversions have caused a recession over the 9 to 22 month period almost every single time, which means that a recession is on the anvil. At least that's what the indicator currently says.